Germany just demanded $200 billion worth of gold back from the United States. Not in 5 years, right now. And at that exact moment, ladies and gentlemen, German investment in America collapsed by 45%, while their investment in China surged 55%. This is not a coincidence. This is the image of Germany quietly walking away from the American alliance. And when you understand why, you'll see the entire post-war financial order starting to crack. I'm L of House of L. With a PhD in computer science, I use data analysis to spot patterns in geopolitics and economics. Here is what is actually happening. Germany holds about $264 billion in official gold reserves, making them the world's second largest holder after the United States. But there is a lethal problem here. Over $200 billion of that gold, roughly 1,200 tons, is not in Frankfurt. It sits in Federal Reserve vaults in New York. For decades, this was not an issue. Germany stored gold in Allied vaults as insurance during the Cold War. But now, German lawmakers, economists, and even former Bundesbank officials are publicly demanding the repatriation of this gold. The timing matters here a huge deal, because it is happening exactly as trust between the two sides of the Atlantic is evaporating. When your best friend demands the keys to the money chest in the middle of a fight, it's no longer administrative. It is a manifesto of total loss of confidence in the financial system led by the United States. Ladies and gentlemen, to understand why Germany is fleeing from its alliance with the US and demanding every ounce of their gold back, we must look at what I call the systematic destruction of German industry. This is not a theory. It is a programmed economic outcome via Washington's energy strategy. Look at the raw numbers before 2022. Russia supplied Germany with over 150 billion cubic meters of natural gas annually via pipelines at extremely competitive rates, roughly $200 to $300 per thousand cubic meters. That was the blood feeding everything in Germany, from auto giants like Volkswagen and BMW to chemical and machinery conglomerates. The entire German economic miracle was built on this foundation of cheap energy. And then Nord Stream was destroyed. Remember? President Trump even admitted in congressional testimony that he was the one who ended Nord Stream 2, calling it the largest pipeline in the world going to Germany. He explicitly stated his goal: force Europe to buy American liquefied natural gas instead of cheap Russian gas. And ladies and gentlemen, he did it. By 2024, Russian gas supply to Europe dropped to 37 billion cubic meters, while US LNG exports to Europe quadrupled, exceeding 80 billion cubic meters. Today, the United States supplies 57% of Europe's total LNG imports. If Trump's proposed trade deal passes, America would control 80% of the entire continent's gas supply. But here is the steel punch to the German economy that very few people bother to analyze: the cost. American LNG costs 3 to 4 times more than Russian pipeline gas. Imagine you run a factory and suddenly your most critical input cost quadruples, while you are also facing a 20% tariff on exports to your largest market. The result? A chain reaction collapse. In December 2024 alone, German industrial production fell 2%. Manufacturing output dropped for the first time since August. When operating costs skyrocket, German businesses have only two choices: move their entire factories to the US to enjoy domestic energy subsidies, or find an entirely new manufacturing base. Washington thought they won by forcing Germany to buy their LNG. They thought by strangling Nord Stream, they would force Germany to remain knee-deep in US dependency forever. But ladies and gentlemen, Germany looked at the price of that dependency and they saw a trap. They realized that being a US ally today means accepting the butchering of their own industry for the profit of American energy corporations. That is why they aren't moving factories to the US, as Washington expected. That is why they are demanding their gold. They are looking for an exit, and that exit, as the investment data shows, leads straight to Beijing. So, if you are a German CEO, what do you do when the energy trap I described in the previous part snaps shut? Washington is betting that you'll panic and move your entire production line to Ohio or South Carolina in search of cheaper gas. But ladies and gentlemen, the actual data is showing an entirely different scenario, one that Washington absolutely dreads. Germany is fleeing to China. Look at the foreign direct investment figures. While German capital flows into the US, crashed by a staggering 45%. Their investment in China surged 55%, reaching $8.3 billion. You didn't hear that wrong. Germany is not choosing America as its new safe haven. They are choosing China. Why? Why would a democratic nation like Germany choose to invest in our greatest rival? Because German corporations have done a cold-blooded economic calculation. In the US, they face a producer price index rising 3% annually, with steel prices up 30 to 50% since Trump's tariffs began. Building a factory in America right now means betting your entire future on a market where rules can change with every social media post. Look at the case of Volkswagen. The automotive giant just officially announced the suspension of its Audi plant expansion projects in the US. After reporting losses of $2.5 billion in just 9 months, all due to the fallout from tariffs and escalating production costs. They simply don't have the money left to risk on this volatile American dream anymore. But what about China? German companies aren't just building factories to sell to the Chinese. They are building an alternative manufacturing base to sell to the rest of the world except the US. Look at the plans of DHL, the German shipping titan. In their latest growth target report, they list Brazil, Mexico, India, China, and Southeast Asia. Do you notice which country is missing? That's right, it's the United States. When you work in finance, you know that capital flows never lie. They reveal the true strategic thinking of nations. Germany has seen in America a partner willing to weaponize energy and infrastructure to coerce allies. Therefore, they are choosing China not because they love the political system there, but because they need access to stable supply chains, low-cost structures, and a global manufacturing network that the US has manually dismantled. Germany is sending a steel-hard message to Washington. If the US continues to treat allies as hostages for blackmail, they will find another market, another supply chain, and a future no longer dependent on the dollar. The migration to China isn't a betrayal, it's survival. And that is why they want their gold back right now. They need financial autonomy to walk this new path without Washington holding them by the throat. Why is Germany demanding its gold? Why are they demanding it right now? The answer isn't in the balance sheets of the Bundesbank. It's in what they've watched Washington do to other nations' assets over the last 3 years. Look at this naked truth. When Russia invaded Ukraine, the United States and its allies froze over $300 billion of the Russian central bank's foreign reserves. When Venezuela fell into political chaos, the UK and the US refused to let the Maduro administration touch the nation's gold reserves stored abroad. For lawmakers in Berlin, this was a terrifying wake-up call. They realized that in this era of financial weaponization, your gold is only truly yours when it's within your reach. If you offend Washington, whether it's over Nord Stream tariffs, or because you dare to shake hands with China, that $200 billion worth of gold in New York can turn into a political hostage in the blink of an eye. What is the specific evidence of this concern? It is counterparty risk. Germany currently stores 33% of its total gold reserves in New York. But remember the last time they tried to repatriate a fraction of that gold. Do you know how long it took? 4 years. It took 4 long years for the US to transfer a small amount of gold back to Frankfurt. Why so long for their own property? That question has haunted German economists for a decade, and under the current Trump administration, it has become an existential fear. Former Bundesbank officials are now saying publicly what they once only whispered: if Germany enters a fiscal crisis and needs to sell gold to save the euro or fund stimulus packages, how do we do that if the gold is detained in New York? The answer is, you can't, not if Washington doesn't let you. Germany sees a frightening pattern. The United States is using its control of the global financial system not to protect stability, but to punish anyone who doesn't follow its economic decrees. Trump once threatened Europe with retaliation if they dared to dump US Treasury bonds. So what do you think he'll do with Germany's gold if Berlin decides to go against US interests in Asia? Germany is making a cold risk calculation. They would rather pay millions in storage and expensive shipping fees to bring the gold home than continue paying custody fees to the Federal Reserve in exchange for what they call counterparty risk. When trust the glue of the post-war financial order has evaporated, those gold bars are no longer insurance. They are chains. And Germany is doing everything in its power to break those chains before Washington locks them forever. Make no mistake, ladies and gentlemen. If you think this is just a German problem, you are missing the entire geopolitical script currently unfolding. Germany is not an outlier. They are the opening shot. When Europe's largest economy and America's most loyal ally decides to demand its gold and withdraw its capital, they are sending an emergency signal to the entire continent. Our safe house is on fire. And look who is paying attention. Lawmakers and central bank officials in France, Italy, and the Netherlands are watching Germany's gold demand with laser focus. Why? Because they are all in the same boat of risk. France currently holds about 2,400 tons of gold. Italy holds nearly 2,500 tons. A significant portion of that is also sleeping in Fed vaults in New York. The naked evidence of this concern is the shift in EU foreign direct investment. It's not just Germany. The entire European Union is beginning to pull investment back from the US. According to the latest data analysis, this pattern is accelerating across the EU. When the US froze Russian assets, they inadvertently created a terrifying precedent for every nation holding foreign reserves in New York. Italy and France are starting to ask, if tomorrow we disagree with a new Trump sanction against a trade partner, will our gold be held hostage? Look at the Netherlands. This is a nation famous for its fiscal caution. They quietly repatriated some of their gold a few years ago, but now pressure from the Dutch parliament is forcing the central bank to accelerate the process. They are calculating a governance risk math. What is the benefit of storing gold in the US? The answer today is zero. Gold earns no interest. You pay millions of dollars in annual custody fees to the Fed, and in return, you get counterparty risk. Washington's desperation only makes things worse. When the US threatens dire consequences if European nations dare to dump treasury bonds, they inadvertently confirm their allies' worst fears, that America no longer views them as partners, but as dependents forced to fund Washington's massive fiscal deficits. This is the domino effect. Germany has opened the exit ramp. If Germany succeeds in bringing $200 billion of gold home, wait and see what France does next. Watch how Italy acts. As the wall of trust in the US dollar cracks, each nation will begin seeking its own way out. They are diversifying into resource-heavy economies, returning to real assets like gold and silver, and building a new financial order where Washington is no longer the center. We are witnessing the end of an era where America was the world's custodial center. When your best friends start moving their furniture out of your house, it's not a coincidence. It's a sign they no longer believe you can protect their assets, or worse, they fear you might be the one who steals them. Ladies and gentlemen, we've traveled from the gold vaults of New York to the destroyed pipelines in the Baltic Sea, and finally to the new factories rising in Shanghai. The biggest question I want to leave you with tonight isn't whether Germany gets its gold back. The real question is, what is the price of coercion? For decades, America's strength didn't just lie in missiles or aircraft carriers. It lay in trust. The world stored its gold here because they trusted us. The world bought our bonds because they believed in the stability of the American legal system. But when Washington began using that power like a cudgel to blackmail allies, to force them to buy expensive energy, to threaten sanctions if they didn't obey that, order officially collapsed. The bitter truth is that Mr. Trump's economic coercion strategy is producing the exact opposite of what he expected. Instead of forcing Germany to be more dependent on the US, it is pushing Berlin into the arms of China. Instead of protecting the dollar, it is sending central banks across Europe fleeing to bring their gold home. Capital has no loyalty, ladies and gentlemen. It only goes where it feels safe. And today, in the eyes of our closest allies, the United States is losing its status as a safe haven. When you spend years building bridges only to use them as hostages, when you own the world's gold vaults but make their owners live in fear, you are no longer the leader of an alliance. You are becoming a jailer. And in economics, as in geopolitics, no one wants to do long-term business with a jailer. Germany has given its answer. France, Italy, and the Netherlands are preparing theirs. The era of unconditionally obedient allies is over. We are entering a multipolar world where Washington's arrogance has inadvertently created a permanent exit ramp for its best friends. Thank you for watching. I'm El of House of Hell. The truth is sometimes hard to accept, but the data never lies. Good night.